Hello and welcome to Dinar Shift. The financial landscape of Iraq is sending out signals that are louder and more compelling than they have been in a decade, suggesting a significant pivot point is approaching for the Iraqi dinar and the nation's entire economy. For years, the possibility of a major monetary shift orchestrated by the Central Bank of Iraq, CBI, has been a topic of continuous discussion, often fueled by speculation. However, the coordinated, evidence-based preparations visible now are distinctly different from the past. Iraq is strategically aligning its domestic and international finances for a potential, carefully managed adjustment that could fundamentally reshape its standing on the global economic stage as we look toward 2025. This isn't just noise. It's a confluence of strong, measurable indicators that point toward a coordinated, systemic transition. The foundation of this current financial momentum is a historic and massive buildup in Iraq's foreign currency reserves, which are now hovering around an impressive $112 billion. This figure represents more than a mere high water mark. It is a clear statement of intent by the CBI, demonstrating a methodical and intentional effort to build profound financial strength. These reserves function as the nation's ultimate financial shield, providing critical protection for the local currency, underwriting essential imports, helping to manage inflationary pressures, and most importantly, giving the central bank the necessary leverage to execute sensitive monetary policy decisions without succumbing to external vulnerability or pressure. The sheer scale of this reserve accumulation becomes even more striking when one considers that Iraq's reserves were roughly half their current size just a few short years ago. This dramatic increase is a direct result of consistently robust oil sales, coupled with the implementation of tighter revenue controls, and significant efforts to reduce financial leakage and illicit transfers. By steadily shoring up its backup funds, the country has fortified its balance sheet. When a central bank reaches and maintains such a substantial level of reserves, it universally signifies a strategic posture, either preparation for a major defensive action, or, more likely in this context, a powerful strategic shift in its overall monetary framework. The evidence suggests this reserve buildup is far from accidental or random. It coincides directly with a sweeping wave of economic reforms taking place across the country, encompassing major upgrades to digital banking infrastructure and structural changes to the overall monetary system. This intentional accumulation serves as a vital preparatory step for what many analysts inside and outside the region believe will be a strategic adjustment period, with conversations increasingly centering around the mid-2025 timeframe. The CBI is laying the groundwork, ensuring the system can absorb and successfully manage any policy decision it chooses to implement, reinforcing the view that a significant planned event is on the horizon. A term that has gained increasing traction among financial analysts discussing Iraq's plans is the fifth quarter adjustment. While fiscal calendars contain only 4 official quarters, this informal insider phrase is used to describe a transitional strategic window that often takes place between regular reporting cycles. It is a period when central banks might choose to implement major decisions that do not neatly fit into the standard fiscal quarters, deliberately signaling an action that is both unusual and significant. The appearance of this specific phrase in discussions related to Iraqi banking policies has rightly caught the attention of global observers, as it typically prefaces a major currency management policy restructuring or the preparations for a substantial rate adjustment. The strategic importance of this fifth quarter timing is further amplified by the synchronization of several key national economic cycles. Projections related to major oil revenues, the influx of foreign investments, the finalization of new digital financial systems, and the completion dates of large-scale government contracts all align for significant changes unfolding around the same general period in 2025. Therefore, when one hears this particular phrase, the essential takeaway is that it refers to a specific, non-routine window during which Iraq's central bank may introduce fundamental financial changes that fall outside the normal predictable calendar of events, a clear indication that a move beyond routine policy updates is being planned. One of the most persistent and powerful pressures driving the need for this systemic preparation is the considerable and persistent gap between Iraq's official exchange rate and the rate prevailing in the parallel market or street rate. This ongoing disparity places immense stress on the entire economic ecosystem, impacting ordinary citizens, domestic businesses, international traders, and the commercial banking sector alike. Importers frequently face significant hurdles in reliably obtaining US dollars at the official rate, while local markets grapple with sharp, unpredictable price swings, which families feel directly through elevated costs for basic essential goods. The central bank is acutely aware that this fragmented currency environment is not a sustainable long-term model. The longer this significant gap between the official and parallel rates remains, the more severely it erodes public trust in the national currency and undermines the country's long-term financial stability. In response, Iraq has been strategically and systematically tightening financial regulations, aggressively implementing advanced digital payment systems, and coordinating closely with international partners to address this issue. These comprehensive steps are specifically designed to stabilize the currency, combat financial manipulation, and ultimately reduce the system's reliance on the untraceable cash-based channels that are the root cause of much of the uncertainty. When examining the potential for a 2025 adjustment, it becomes clear that a core motivation stems from this significant internal pressure to unify the currency's value. Iraq requires a more unified and fundamentally stable currency environment to unlock its full economic potential, and the most decisive way to achieve this critical goal may be through an official strategic adjustment. Such a move would be intended to officially push the entire economy onto a new, more controlled and transparent trajectory, effectively addressing the structural weaknesses that have allowed the parallel market to flourish outside the CBI's control for so long. Simultaneously, Iraq is positioned on the cusp of enormous potential for economic growth. The country's vast oil production continues to generate massive revenue streams, providing a continuous infusion of capital. Large-scale infrastructure projects are either underway or planned, and crucially, foreign companies are demonstrating a renewed confidence by returning to the market. Furthermore, the nationwide rollout of modern banking upgrades is actively transforming the financial landscape, with payment systems rapidly transitioning to digital platforms and government services moving online to improve transparency and efficiency. These far-reaching developments collectively signal a national ambition to transition from a reactive, crisis-driven financial model to a proactive one focused on long-term stability and growth. A key pillar of this transition involves reducing endemic corruption, improving government transparency, and significantly upgrading financial monitoring and compliance mechanisms. These internal steps are designed to structurally strengthen the country's economic foundation, simultaneously giving the central bank enhanced authority and greater power to effectively shape future monetary policy without being constantly diverted by short-term crises. The combination of massive, historic foreign reserves, the deep-seated pressure to resolve the dual-rate currency problem, and the burgeoning potential for diversified economic growth makes it abundantly clear that Iraq is preparing for something far more significant than a mere routine policy update. The collective evidence strongly points toward a national economic reset that is carefully aligned with the country's long-term strategic national goals. This is a primary reason why a growing consensus among analysts and observers suggests that 2025 is the timeframe for a major monetary decision that will fundamentally alter the country's financial outlook. When the term adjustment is used in this context, the initial thought for most observers is a definitive exchange rate shift. While no specific action has been confirmed by the CBI, this remains one of the most vigorously discussed possibilities. One scenario involves the central bank choosing to slightly strengthen the dinar against the dollar. Such a move would be a powerful signal of confidence in Iraq's fortified reserves and the overall positive direction of its economic reform program. A managed movement from the current rate toward a slightly stronger value would be interpreted as a public declaration that Iraq is ready to move beyond its recent financial challenges. It is important to understand that this potential shift does not necessarily imply an immediate, dramatic, or massive overnight revaluation. A more likely and realistic scenario is a managed, gradual strengthening process, a calibrated approach designed to lay the critical groundwork for any future, more significant decisions. Central banks are generally cautious and rarely implement dramatic rate changes without first diligently preparing the financial environment, minimizing the risk of shock. A controlled, step-by-step adjustment is a far more realistic expectation, especially considering the Iraqi government's primary focus on ensuring systemic stability throughout the transition. Nevertheless, any level of strengthening, whether moderate or slight, would inevitably have a palpable impact across the markets, influencing the cost of imports and affecting public finances nationwide. Iraq could strategically leverage this opportunity to gradually reduce its historic dependency on the dollar, improve the local population's purchasing power, and effectively ease the inflationary burden on its citizens. If skillfully executed, a thoughtfully managed rate adjustment could become one of the most pivotal steps in Iraq's entire modern financial development, injecting stability and confidence back into the everyday economy. However, the potential 2025 shift involves more than just the exchange rate. It also encompasses a potential restructuring of Iraq's internal banking system. The central bank appears intent on using this adjustment window to deepen its efforts to significantly reduce the nation's reliance on the US dollar. For decades, the Iraqi economy has operated on a heavily dollarized basis, particularly within trade and day-to-day business transactions. This heavy reliance renders the country susceptible to international dollar fluctuations and global supply disruptions, which the government is now actively working to mitigate. The strategic goal is to build a more robust, self-sufficient, and independent financial system by actively promoting the use of the Iraqi dinar for the vast majority of domestic transactions. Commercial banks are being strongly encouraged to expand their dinar-based services and rapidly accelerate the growth of digital payment channels to provide viable alternatives to cash. Furthermore, the central bank has been rigorously enforcing stricter regulations on the flow of foreign currency to enhance overall system cleanliness and transparency. If the 2025 adjustment package includes these new, deeper banking policies, the changes could facilitate a more balanced, domestically focused financial ecosystem. Such structural reforms would significantly aid in unifying the market rates, providing stronger protection for the dinar's value and, crucially, alleviating the chronic pressure caused by the proliferation of informal black market currency channels. Strengthening the Iraqi financial system from the inside out through comprehensive banking reform is considered by experts to be just as vital for long-term stability as any change to the exchange rate itself. The dual approach signals a commitment to holistic economic health, rather than just a quick fix. Beyond the direct actions impacting banks and currency, Iraq may also utilize the anticipated 2025 adjustment period as the moment to roll out major new fiscal policies at the government level. With its reserves comfortably exceeding $100 billion, the country possesses substantial fiscal capacity to invest meaningfully in productive and diversified sectors, including agriculture, manufacturing, energy diversification, and advanced technology. By significantly strengthening domestic production across these areas, Iraq can reduce its reliance on foreign imports and, by extension, help stabilize consumer prices. When a country successfully reduces its dependency on foreign-sourced goods, the demand for its local currency naturally increases over time, leading to organic, sustained strengthening of the dinar. Additionally, the government is well positioned to use this strategic window to fund major infrastructure upgrades, ambitious energy diversification projects, and broad-based economic development programs. These targeted investments are designed to create new jobs, build critical long-term growth capacity, and substantially reduce systemic financial risk, providing a powerful economic boost in concert with monetary adjustments. The current alignment of factors is rare. Iraq possesses both immensely strong foreign reserves and a clear, coordinated support structure from the government's leadership as it heads into 2025. Prime Minister Al-Sudani's administration has consistently emphasized themes of modernization, transparency, and financial sovereignty since taking office. His government has actively championed digital reforms, tightened revenue oversight, and fostered crucial cooperation between various ministries. These public messages are not isolated. They directly signal a clear and strong alignment in strategy between the political leadership and the financial authority of the CBI, making the likelihood of major coordinated change significantly higher. The timing of these discussions also aligns perfectly with the progression of large-scale government projects, the establishment of new foreign partnerships, and key revenue cycles tied to the nation's dominant oil production. These synchronized factors collectively reinforce the idea that Iraq is deliberately preparing for a full-scale, coordinated financial transition, rather than just a minor or isolated policy update. An adjustment in 2025 is a logical and precise fit within the broader long-term objectives that the government has been methodically advancing over the past 2 years, leading many observers to conclude that a major, systemic shift is genuinely underway. If Iraq proceeds with a significant monetary move, the resulting global interest is expected to surge. A more stable and intrinsically stronger Iraqi economy is a cornerstone of broader regional stability across the Middle East. As a crucial oil producer, any measure that stabilizes its financial system creates beneficial ripple effects that extend into global energy markets. Moreover, foreign investors from regions like Europe, Asia, and the Gulf are already showing keen interest in Iraq's emerging sectors, including housing, logistics, and technology, and a more stable dinar could dramatically accelerate this foreign investment inflow. Furthermore, Iraq's strategic geographic location positions it as a vital trade hub, connecting the Gulf region with Turkey and Europe. The implementation of a stronger, more reliable currency and a modern, efficient banking system would immediately make international trade more seamless and cost-effective. Major global powers, including the United States and China, also possess significant strategic interests in Iraq as both benefit from sustained financial stability in the region. A carefully managed 2025 adjustment is therefore likely to attract increased international attention and potentially crucial support, given its implications for global stability and commerce. As the crucial 2025 window approaches, several key indicators should be closely monitored by observers. The first are the official announcements from the Central Bank of Iraq. While the CBI is unlikely to reveal the precise timing of a major decision, it often telegraphs its intentions through carefully worded policy statements, new banking guidelines, or highly technical bulletins. Any official mention of exchange rate studies, changes to reserve applications, liquidity adjustments, or new currency flow controls must be watched with exceptional attention, as these are the subtle signals of pending action. Another vital area of focus is Iraq's national budget. Government budget documents often contain embedded clues about projected exchange rate assumptions or spending plans that are strategically aligned with expected financial adjustments. If the Iraqi government introduces significantly revised or new financial numbers in its 2025 budget that diverge from previous norms, this could provide an early, indirect revelation of the intended direction of future monetary policy and the expected outcome of the CBI's upcoming decisions. The state of Iraq's foreign reserves also remains a critical indicator. If the reserves continue their upward trajectory, steadily climbing above the $112 billion mark and approaching $115 billion or more, it serves as a powerful, unambiguous signal that the central bank is actively building maximum strength and preparing its financial defenses for the implementation of substantial pre-planned changes. Finally, the parallel market is a necessary barometer. Any sudden, unexpected stabilization or unusual sharp price movement that cannot be explained by normal supply and demand could signal that insiders are anticipating a major policy adjustment. For the population residing in Iraq, a potential 2025 adjustment could translate into direct, tangible effects on their daily lives. Should the dinar successfully strengthen, or if the comprehensive banking reforms prove effective, the cost of essential imported goods, which include items such as food staples, medical supplies, electronics, and vehicles, may become more affordable. This renewed affordability would be a significant boost to the average consumer. Businesses would also gain greater long-term confidence, as a more stable or stronger currency makes future planning easier, long-term contracts more predictable, and reduces the damaging volatility of price swings. A stable and strengthening economy also acts as a magnet for foreign companies, creating a new surge of job opportunities in vital sectors, such as construction, energy, manufacturing, and technology. Furthermore, the nationwide expansion of digital banking services aims to integrate a greater number of people into the formal financial system, reducing reliance on cash, improving transaction security and speed, and ultimately strengthening the overall national economy by increasing financial inclusion. The potential benefits for daily life and economic certainty are profound, provided the transition is expertly managed. However, it is crucial to acknowledge that any major financial adjustment of this magnitude inherently carries certain risks. Any decision by the central bank to change currency policies will inevitably increase political pressure. Certain influential groups or powerful interests may naturally resist changes they perceive as detrimental to their financial standing, and internal disagreements could temporarily slow progress or create significant friction within the system. The potential for market manipulation is also a persistent risk, as speculators may attempt to influence the parallel market based on rumors to profit from short-term fluctuations, leading to temporary but disruptive volatility. Additionally, regional neighbors may strategically adjust their own economic positions in response to changes in Iraq's financial landscape. If Iraq becomes more economically competitive in trade or investment, neighboring nations may feel compelled to reconsider their existing trade agreements or regional policies. Both political and economic reactions from partners and rivals alike must be carefully anticipated and expertly managed to prevent unnecessary strain. Despite these inherent risks, Iraq appears to be moving forward with meticulous caution and is coordinating closely with major international financial institutions to ensure the entire process remains as stable as possible, minimizing the chance of sudden shocks. Many observers frequently wonder what distinguishes this current moment from the countless other times that speculation about Iraq's financial future has emerged. The definitive answer lies in the evidence. In the past, rumors of revaluations were often devoid of strong, tangible backing. Today, however, Iraq holds over $100 billion in reserves. Sophisticated digital financial systems are actively being deployed nationwide, and measures to combat corruption are demonstrably stronger. The central bank has transitioned from merely discussing reform to actively implementing it across the entire financial infrastructure. The economy is on a firmer foundation. The government is operating with greater alignment, and international partnerships are more structured than ever before. This time, the undeniable numbers match the narrative. Iraq has painstakingly created a solid foundation for genuine systemic change, moving far beyond mere speculation. When the strength of the reserves, the decisiveness of policy actions, the clear government alignment, and the heightened global interest are all combined, it becomes unequivocally clear that a larger, more powerful economic development is unfolding behind the scenes, separating this period from all those that came before it. As this critical juncture approaches, the Central Bank of Iraq remains the undisputed epicenter of activity. Its strategic decisions in 2025 have the potential to define the country's entire next decade. If the bank opts for a controlled, managed adjustment, the dinar could enter a phase of sustained, gradual strengthening. If it pushes forward with deeper structural reforms aimed at reducing dollar dependency, Iraq could achieve a higher degree of genuine financial independence. Moreover, if the government follows through by investing wisely in domestic production, the country's long-term economic power and resilience could grow substantially. All available data and policy signals point unmistakably toward preparation for a transformative and highly strategic step. However, the central bank will, by tradition, not reveal its precise move until it deems the timing to be absolutely optimal for maximum stability. This is why seasoned analysts consistently emphasize the importance of watching the patterns of evidence, the accumulated data and policy changes, rather than being distracted by unverified rumors. The discernible structural patterns are the only elements that accurately reveal the real unfolding story of Iraq's financial future. Ultimately, Iraq stands at a profound crossroads. The nation has navigated and endured years of financial uncertainty, political volatility, and immense economic pressure. But today, the country is equipped with historically strong reserves, a more unified government leadership, and vastly improved financial tools to confidently build a stable future. A carefully executed 2025 adjustment could finally unlock the door to long-term sustainable growth, solidify regional influence, and fundamentally renew public and international confidence in the national currency. The potential move could help Iraq successfully transition from a vulnerable, dollar-dependent system to a far stronger, more self-reliant financial structure. Whether this strategic shift ultimately results in a managed revaluation, the introduction of a completely new exchange mechanism, or a comprehensive overhaul of its entire monetary policy remains to be seen. But the trajectory is clear. A major shift is coming. Iraq is preparing for a serious financial move, and the world is now beginning to pay very close attention to its next steps. The coming year will be pivotal for the Iraqi dinar and the national economy.